Everybody, thank you for tuning in. Thank you for joining me. If you are watching the replay, do give me a hashtag replay in the comments. Let me know that you are here. This is AMs with Annette, currently covering the UK business and coronavirus updates. We are speaking about everything relating to the economy, the banks, the government, UK business in general. What I am not covering is anything health related at all. That is not my remit. That is not my area of expertise. So that is not what I'm going to be speaking about, but I will be speaking about UK business and the economy and all those related aspects in today's session of AMs with Annette. This is my live show happening weekdays, pretty much everywhere where I'm able to live stream currently. So we are live on TikTok, Instagram, Facebook, YouTube, Periscope, Twitter, and of course within the Uncover Wealth community, my private community on Facebook, which you are welcome to join. I invite you to come and join. You just need to search Uncover Wealth Community in the search bar on Facebook to do that. So thank you for everyone who's hopping on. I hope you're well this morning. Now, if you do have any questions around UK business and coronavirus, please do ask me in the comments. Anything in relation to your business specifically, you are more than welcome to ask me. So please do. I also have a cup of tea with me as well. For those of you who are new to my live streams, if you have not watched me before, my name is Annette Ferguson. I am CEO of Annette & Co, UK-based accounting firm. I am a chartered accountant and certified profit first professional. And I typically help business owners take more money out of their business for them and their families to enjoy by focusing on the profit side of things. Of course, at the moment, that is incredibly challenging for many businesses, which is why I am doing these daily live streams, coming to you to speak all about UK business and coronavirus, the impact and what you can do as well. So the first thing that I want to cover off and cover today, interesting. The first thing I want to speak about today is the UK inflation rate. Now, we touched on the fact yesterday that there are discussions underway that UK inflation rates may fall negative. So I'm going to be covering a bit more of that today as well. So UK inflation rates are seeing their coolest they cool at the lowest level since 2016. So that is amid a plunge in energy prices. There has been a drop to 0.8%, which has added pressure on the Bank of England to cut the borrowing costs. It was at 1.5% in March, so that's quite a big plummet. It comes off the back of energy prices having fallen 9.3% in April, footwear and clothing down 3%, but that has been offset by increases in prices for recreational goods, food and alcohol. And as I say, it invites a question again, should the UK move to interest rates below zero? Should we have negative interest rates? The inflationary target for the UK is 2%, so we are well below that at the moment, and that will be an interesting thing to pan out and see whether we do actually end up dropping to negative interest rates. Of course, negative interest rates essentially penalise savers and benefit spenders. That is, of course, what the government wants to happen in order to get the economy started again, to get the economy moving, and to not stay in a slumped recession for a long period of time. So thank you, Sofo Therapist, for tuning in. Thank you, Phil. Thank you, Redmax. Thank you, Gareth. Thank you, Alfie. Hello. Thank you for saying hello. I do appreciate that. Hello, Shishi. Thank you for tuning in to me today. And if you are watching on other platforms as well, thank you. I appreciate you tuning in too. Please do come and say hello to me if you are tuning in. It is always great for me to know who is here, and it is always lovely to know who I'm speaking to. So please do make sure you say hello if you are tuning in today. HMRC has won a landmark case which has ruled that tax relief is only applicable on pension contributions made in cash and not other types of assets. This is said to affect many thousands of savers and company directors and small business owners as well. Many have used the legislation in the past to get tax relief on shares and commercial property, but it's now believed that millions of pounds may be reclaimable by HMRC on this landmark ruling, which went before the courts. Many people have been asking now HMRC to be lenient, as the guidelines seemed to indicate that this was allowed, but this ruling has cut that off. So this is going to be a big problem for many people who have been using non-cash assets for their pension contributions and have been claiming tax relief on that. There are a number of people that do that, and it has seemed to be legal up until now, but as I say, this landmark ruling has made it not possible anymore, and there's potentially clawback of millions of pounds worth of tax relief as well. Will cause a big problem for many, that piece of legislation, or that ruling rather than legislation, that ruling that's come in. So the Chancellor warns that the UK economy could soften and suffer permanent scarring as a result. So Chancellor warning the UK economy could suffer permanent scarring. It is seen the biggest month-on-month increase in out-of-work benefits claims since records began in 1971. Plus, in addition to that, there are now 10 million people on furlough who are precariously relying on the state to pay their wages at this point in time, with unknowns as around their job security, as to whether their jobs will actually exist or whether they will be added to this out of works benefit claimant numbers. The Chancellor said, "We are likely to face a severe recession, the likes of which we haven't seen. And of course, that will have an impact on employment." Some hard words there from the Chancellor, and giving us an indication of what may be to come in terms of the severity of a recession that we are facing. We have, of course, not technically officially gone into recession. That requires 2 quarters of contraction. However, with Q1, we saw a contraction, and the lockdown was only for around a week in Q1. So it is most certain that that will happen in Q2 as well. And so it's just a matter of waiting for time for the data. It was last week that the Chancellor announced that we were in recession, and echoing that yesterday with his words around the worry of the impact that it's going to have on employment as a result. More than 2.2 billion has been lent to UK companies under the coronavirus loan schemes, of which there are 3. There is the bounce back loan, there is the CBILS loan, the coronavirus business interruption loan scheme, and finally there is also a loan scheme for larger businesses as well. So out of that 22 billion that has been lent, around 14.2 billion has been done so through the bounce back loan scheme. So that is incredibly positive news for many people. That is working in the way it intended. There are some sticky points, there are some issues with certain banks, and there are some issues in certain places, but for the most part, everyone who is applying for the bounce back loan is receiving it in an incredibly timely manner. Some banks within a matter of hours, some within 24 to 48 hours, which was the original plan for the paying out under that scheme. Barclays are having an issue, HSBC are having an issue, and many people are having issues who bank do not offer this scheme. There are, though, more and more banks and fintechs joining this scheme as they get approved by the British Business Bank. The British Business Bank is a bit of a bottleneck for this happening. Now, while I'm speaking about this as well, I did find out yesterday that something I wasn't quite aware of before, that each bank has been given a limit on the number of loans that they can issue, the number of bounce back loans they can issue. This limit has been applied by the British Business Bank, and it is different for every bank. And once they get near that limit, they need to apply to the British Business Bank for an increase in facility that they are allowed to lend. So that is interesting. They are not allowed, each bank, to disclose what their limit is, or if they've applied for new limits, they're not allowed to disclose what that looks like. but this is something that is in place. There is a limit on how much each individual bank is able to give out under the bounce back loans scheme. And once the bank reaches near that limit, they have to request an increase in the limit in order to be able to keep lending. So although the bounce back loan scheme is available until the end of November, it's going to be interesting to see how this plays out, if people are just going to stop asking for increases in limits and stop providing this, or whether they're going to keep doing that. We just don't know at the moment what that will look like for the banks. So that is something to note as well. The £500 million Future Fund, which is intended to help innovative and high growth businesses survive, launches today. That provides loans between £125,000 and £5 million. And if businesses are unable to pay that, that loan would then be converted into equity for them. So that launches today on the 20th of May for those businesses as well. We're also hearing reports that the shadow economy is growing. Now, the shadow economy is basically people who are working below the HMRC's radar. So they are not declaring their income, they are not declaring their profits, and they're not paying tax on that. That economy appears to be growing. It is estimated that even before this pandemic kicked in, there were around 2 million people in the shadow economy. Of course, incredibly difficult to measure because they don't report anywhere. That is part of the issue. But it has been said to be seen to be growing as well as a result of this. So people, doing side work, not reporting their earnings, not registering as self-employed or not registering a limited company and doing it that way. So that is interesting, and it will be interesting to watch what emerges from that and how that progresses over time as well. I suspect that many people are being tempted into the shadow economy at this point in time to do basically cash in hand work, which they don't then declare. There are temporary rules which have been introduced by the Finance Secretary to the Treasury, Jessie Norman. They have said that they are exempting people who have been forced to work from home due to the lockdown from paying income tax and national insurance on newly purchased home and office equipment. A reimbursement would usually take place from the employer to the employee for this, and the employee would usually be taxed. That usually would be taxable, but this is a temporary exemption that has been put in place now, and it means that they're not. The Institutes of Chartered Accountants in both in England and Wales and in Scotland have both been pushing for this measure to be introduced to avoid employees suffering tax consequences as a result of having to purchase equipment to work from home safely. So that is great news that that those restrictions have been temporarily lifted as well. We're seeing 1 in 10 retailers are now saying they are at risk of imminent collapse, according to latest survey results as well. This is obviously a problem I spoke yesterday about a number of businesses now in administration, and this has long-term consequences, both for our high street, for our economy, and also for, of course, for jobs and employment. So a big issue there as well. The UK government has set out post-Brexit tariff plans. Of course, as we are going through coronavirus, Brexit is still bubbling in the background. We are heading towards it, of course, or towards the full exit completely. And there is new tariff plans that have been set out. So they will come into effect in the new year if the UK is unable to secure a post-Brexit trade deal with the EU. The UK global tariff regime sees tariffs on more than 6,000 products being streamlined and simplified, with the aim of cutting costs for businesses and consumers. However, the price of goods imported from the EU will increase. So that is something that is going to come at us once this crisis is over. We'll be in recession, but we're going to have increased cost of goods from the EU as well. Hand in hand, that going with the situation at the moment where the UK's currency is the most weakest in the G10. We have heard that the UK is performing incredibly badly. The pound is performing incredibly badly against the dollar and the euro at the moment. So if that holds out as well, that's going to be a double and triple whammy for the UK when we move towards that situation where the price of goods from the EU would rise as well. The loan scheme for large businesses has has had the limit extended from 50 million to 200 million, but those borrowing more than 50 million have been blocked from paying dividends or cash bonuses to senior management. Interesting piece of legislation here. It follows suit from many other countries are putting this in place, and many were asking at the beginning whether something like this would be applicable for small businesses who were taking on lending and who were borrowing from the banks with the secured schemes, as to whether small businesses would be blocked from paying dividends and bonuses. The answer to that has been no, but they have introduced this now for businesses who are borrowing over £50 million. That is, they are not able to pay dividends to shareholders or cash bonuses to senior management either. Any questions, do let me know in the comments. Everyone is very quiet today. I am seeing no comments, so I don't know whether that is an issue with my chat box in terms of from either from Facebook, Twitter, Periscope, or YouTube. I'm not seeing any comments, which is incredibly unusual. I usually do have people saying hello, but I'm not seeing any from you guys in there today. Let's see if we've got any questions. Hello, Chris. Thank you for joining me. Hello, Jason. Thank you for the follow. I do appreciate it. Thank you everyone for that. I am not seeing any questions coming through at all on any platform, so feeling very lonely today with a lack of questions. If you are tuning in on the replay, please do ask me any questions you have in the comments. I'm happy to answer those, so please do join me there in the comments. If you're watching on the replay, I'll answer any questions that you may have as well. Over 60% of employers in England have been forced to abandon their on-the-job apprentice schemes, furloughing recruits or making them redundant. That's obviously incredibly disappointing, that situation for many, many young people involved in that. One big reason was that 40% of those were suspended because the external training provider has either ceased trading or was unable to run sessions. So presumably unable to move them remotely in some way, potentially because of the hands-on practical nature of many apprentice schemes, or the training provider itself has gone under. Very, very sad and disappointing situation for those young people as well, like I said. This is the UK Business and Coronavirus Update, AMs with Annette, live at 11 a.m. weekdays. I appreciate you tuning in very much to this session. I will be back for another one, of course, tomorrow at 11 a.m. as well, where I will be covering once again the updates in relation to UK business, in relation to coronavirus and how those are working, the governments, the banks, all those things as well. Like I have said at the beginning, I invite you to also come and join me inside the Uncover Wealth community. That is my private community on Facebook. It is completely free to join, and it is the place where I share lots of information that I share there first, and also I have trainings on there every single Tuesday. Training Tuesday, completely exclusive content for the Uncover Wealth community. You just need to head over to Facebook in the search bar and type Uncover Wealth community, hit join request, and we will accept you into that. So I would love if you want to join me in there as well. Any other questions or comments, please do let me know in the comments sections of whichever channel you are on, so that I can answer those while I take a sip of tea. And if no questions come in after that, I will be signing off. So do let me know if you have any questions. I cannot see anything coming in, so that is all fine. Thank you again for tuning in. I appreciate your time as always. I know it's incredibly precious, and I appreciate you spending some of it with me. So thank you so much for joining me today. And as I say, I will be back at 11 a.m. again tomorrow. So do join me there as well. And I will speak to you all really soon.